you're self-employed and your tax returns don't show the income you actually make, I've got an outside-the-box option you need to know about. It's called a profit and loss loan, and it can be a game changer for the right borrower. Hi, I'm ReAnn Gonzalez with Edge Home Finance here in El Paso. I help buyers and homeowners get clear answers and real options, especially when the traditional rules don't fit real life. Today, we're talking about P&L loans, which are designed for self-employed borrowers who want an alternative to using tax returns. Okay, so now let's get into it. A P&L loan is where we use your profit and loss statement as the main way to document your business income instead of relying on tax returns. Now, quick note, because this matters. For the self-employed borrower, this P&L income method can't be combined with other income documentation types. The only exception is asset depletion. So this is very much its own lane. Here are the basics of who qualifies for this type of mortgage. At least one borrower must be self-employed for at least 2 years. You must have 25% or greater ownership in the business, and your P&L must be prepared by a CPA, EA, or CTEC. And we'll need a CPA letter along with the P&L. And here's a big bonus a lot of families love. If your spouse's W-2, co-borrower W-2 income is allowed. The key guidelines are up to an 85% loan to value, minimum FICO score of 660, loan amounts up to $3 million. 100% gift funds are allowed. First-time home buyers are allowed. Property types include primary residence, second home, and even investment properties. Homes allowed are single family, 2 to 4 unit, and condos. 3 to 12 months reserves required depending on the file. And yes, interest only is available for those that want payment flexibility. This is why I call it outside the box, because it gives strong self-employed borrowers a real path forward when the tax returns don't match the lifestyle. I'm going to be honest because that's my style. This is not for someone who can't document the business well, has inconsistent income with no clean story, has weak credit and no reserves, or wants to wing it without solid support from a CPA. These loans work best when your business is real, stable, and your paperwork is clean. If you think this might fit you, here's what I recommend. Talk to your CPA about preparing a clean P&L. Be ready to show ownership of the business. Plan for reserves. These programs want to see you have a cushion. And let me review your goals, purchase price, down payment, and timeline. Because the right loan is not just about approval, it's about a payment you can live with and a closing that goes smoothly. If you're self-employed and you've been told no because of tax returns, don't assume that's the end of the road. There are options when you have the right guidance. Send me a message and I'll take a look at your scenario and tell you straight what I think your best route is.